Hello, Warriors. It's a green day, and Green Day did write the song Wake Me When September Ends. So, one more day. How's everyone doing today? Simon, can someone help Simon? Our longtime friend in our community. Steve, how are you? AJ, how are you,
I can't
Mike?
see what he needs help with. I might have jumped in after the fact, so I'm not
Oh,
sure.
okay. He's been trying to get a 6-month premium. He chatted with operators 3 times and hasn't gotten a response. So that's
Okay.
uh,
I'll put in my email address here.
okay. Thank you, buddy. Happy shutdown to you, Ingmar. There is a song, Shutdown, but it's about race cars. Jan and Dean. Hey, little Cobra, don't you know we're gonna shut you down? Anyway, that's Jan and Dean Beach Boys covered it too. K-Man, how are you, bro?
Good morning, Dale. Good morning, everybody.
Hey, Brad, Ryan,
Good
Blake,
morning.
everyone. Will, how are you? Saloom's here. That means it's a big green day. Kurt Bell, yeah, good morning. Ayaz Khan, Bran, Kurt, Fred Field, the third. Gold is taking off for like months now. Paul Nash, welcome back. Oh, there's Blake's email address. Linda, how are you? Okay, so take a look. Dollar's a little bit weaker as well. So I'm actually starting to buy the dollar on this dip. I know I probably will, probably early. There's probably more of a correction left to the upside, but I have conviction about the trade. I want my toe in the water. So here we go. Let's start with Ryan. Ryan, how are you?
Good, sir. How are you?
Pretty good. Kind of a weak dollar here, bro. Are you looking to sell into this rally? I look at the at cable and 135, 135 and a half. If we do that, we could have a neckline down here at 33 20. And that would look like a big head and shoulders, which would happen from a top. So Blake can't complain about it. It's not an inter market deal. It's from the highs. So left shoulder, 5.5. It's only another 100 pips up here. And then this would measure like under 130. So wondering what you're doing. Yen is working for you. You're still short yen, right?
Short yen
Um,
yet, long the pair.
oh,
Quite a decent sell off though off that 150 test.
yeah.
There's lots of headlines and stuff in the mix. We've got in the month, which every bank model's pointing to dollar selling.
Uh,
We've had Bank of Japan hawkish noises from another member. We've got the election stuff going on now. So if you look at sort of all yen pairs, they've all been given a kick up the arse.
yeah.
Yeah, I'm we've got this end of the month, end of the quarter stuff going on. A big, huge week of data. I'm I'm going to be watching this because I think if we get a decent dip in dollar yen, it might look to counter that if the underlying data hasn't changed and the US is still looking pretty good on the economic front.
Okay. Any take on, I know you're long Canada, it's hardly given up anything. Uh,
Yeah,
this is the one I would buy on the dip. Um,
yeah, good case,
this
good
is,
call.
what do you think? Maybe back to 880, 860. This is pretty big run, 720, 2.25. Maybe we pull back, back into this level prior highs.
Yeah,
Might be,
that would be a big level if we dip back there. Again, if it comes because of month end stuff rather than the data turning worse for the US, yeah, I'm with you on that one. That would look an interesting dip to buy.
and US dollar MEX went right back to the breakdown and looks like it wants to make new lows again. You guys still on the USD MEX train? Did you sell this pop up here? I know long term you guys were pretty bearish.
I sold it into the pop and got out Friday afternoon when it crossed back 1840. and then obviously it went and did another 10 figures after that. We're in the middle of the range. I can see a case why we go and test those 1820 lows again, and why we test those 1850 lows again. So yeah, I think range play, unless something really breaks and starts holding the break.
Okay. Thank you, Ryan. You have
Pleasure,
a good
mate.
weekend? Have a good weekend?
Yeah, heavy one. Had family down. Like, heard of elephants through the house, but yeah, still recovering.
You know what they say about house guests, right?
Oh,
They're like fish. They start to smell after 3 days.
well, there was five of them and a dog. It felt like 50 in a zoo.
All right. So, Kay, how are you? Metals flying again?
Yep.
Yeah. I actually shorted silver at 47.03. One of the reasons was Greg has said that wave 5 was coming in this gold silver ratio, but that was before this. Okay. So now maybe, okay. I mean, maybe you get some type of bear market rally, but what are you doing? You
It's
doing anything?
that silver is anyone's guess. I think there's still a lot of fundamental supply reasons for it to keep its bid, and it's now it's actually given back 30 cents since New York walked in. But yeah, I'm as I was saying on the Flow Show as well, and on my morning update that I sent out, it's starting to get to levels where if if all of a sudden that persistent demand stops, that we could see a bit of a bigger setback. Now, on the other side, as I said, fundamentals, and then if you look at gold, the geopolitics are still not for it to come down. But I'm starting to wonder if we won't have like this runaway price action into the end of the month, and then all of a sudden a pause and both correct. Starting to get this feeling. I bought gold again just below 37.5 last week, and I've already taken 2/3 off, and now I've brought up my trading stop to really not far below 3,800, so I don't give anything back. And so just riding it for as long as the train moves. But again, yeah, I
I
think
will say one
first of
thing about the
October.
gold. You see this? I mean, if you look for technical reasons, there
No.
was no reason to be short gold
Mm,
after it made this high because it was confirmed, right?
mm.
So markets rarely peak with a confirmed high. But this time, look at where the RSI is. It's at 70.
Yeah. The
So, I mean, that is a little different.
the problem. Yeah. Okay.
The
That
problem with technicals is sometimes you could just throw them out the window during a parabolic advance. Is that what you're going to
yeah,
say?
and the thing is, both US and Asian sessions, Europe
It's a
doesn't
global.
with them.
They're
They
they're
both
both buying them.
both bought. So I mean, I just find it still just too big to stand in front of it, you know. But again, I think there's a potential risk coming 1st of October or tomorrow after the stuff, because I've also seen that sometimes month ends, quarter ends, they see some activity in the metals. Are there contracts to be filled? Not enough supply. People panicking, needing them at any price. But then after that will have been done, I'm I'm yeah, I'm just taking into account the possibility that all of a sudden the demand drops, and then and we see a big setback on both. Now, the question is from where? Because if we get another 1.5 session of buying, silver could even be close to 50. Why not?
50, yeah. I mean, we're
They
almost
added
there.
they added a
That's
full
a
dollar to it in Asia. That's a lot.
Yeah,
It's a lot.
that's huge. These are huge moves. I mean, it
Yeah.
takes me back to, I don't know, 1978. That was the
Yeah.
Last $50 squeeze that I remember. I don't
Mm.
remember the other one. That was Hunt. Anyway,
Gold,
it looks like
But
that.
you don't remember the one
gold.
from the early 2000s?
No, what I forgot what happened. Was that because of Y2K and then everything silver?
Financial crisis. It was post
Oh,
GFC. Everybody thought
Oh, yeah,
quantitative
okay.
easing was gonna
yeah, but
make
Yeah,
that's when silver rallied to $50, huh?
okay.
right. It is post QE, like holy shit, what did the Fed do? So
Yeah, yeah. Okay. All right. So
There's also,
any
if you look at
go
it,
ahead.
I've got like a really two interesting. Well, it's extensions on gold. Obviously, we're at a new high, but it's getting interesting around 4K though. Just below, and one just above, and of course it's got that huge target on its back. But yeah, again, I'm starting to be a bit cautious here. Just
Okay.
cautious, you know.
What do you have going in currencies? Anything?
Well, I'm short dollars. I'm a little long euro, little long Aussie, little short dollar Norway. Um, I've actually even sold, but it's just very, very, very small dollar mix. And the reason why is that the past two fixings, and there was no reason for it at all because the rest of the dollars were actually relatively better bid. But the last two fixings, dollar mix got absolutely hammered into the London fixing, and which is a bit strange, which tells me that perhaps before tomorrow we may have seen we may go and visit the bottom of the last range, or I mean the last low in the 1820, 1818, perhaps, because twice in a row we saw 500-600 pips declines in the dollar mix. So I've had it a bit, but yeah, I agree with all the models. Moderate dollar selling end of month, maybe even more for the end of quarter. So I think the dollar could print a low come tomorrow 4 p.m. London.
Okay. So do you view what happened here in the euro? I mean, I look at this and I want to bring Blake in. This looks like only three waves, right? So to confirm that there's a bear move going on, we need another one, don't we, to make it a five and then we get a rally?
yeah, and that's great counting there, Dale. And I mean, the way I look at it is the 116 level
Yeah,
is which would be a fresh low. Like it's actually 115.95 is the level. If you watch the week ahead video, that's the
yeah,
618 retracement of the summer's move.
yeah.
So I've got a buy order to buy the euro dollar at 116 all week long this week. So now I don't know if we're going to see it, but I mean, let's hope your wave count is correct. That's where it would take us.
Okay, buddy.
Yeah.
So the beach ball bounced again. You know what I'm referring to, right, Blake? The beach ball. So
Oh,
what do we
the S&P. Yeah, of course.
uh,
Yeah.
the perennial beach ball?
It's like,
Uh,
yeah, it's like nonstop. Like, it's wild. Yeah. I mean, yeah.
yeah. I mean, I thought maybe we'd retrace and break again, but the new highs look like a layup now.
If gold can do it, why can't the S&P? If, silver
Yeah,
can do it, why can't the S&P? I don't know. I
yeah,
mean, cryptos are still kind of stalling, but,
yeah, they're weak still,
they are. And then you got like, I don't know. You look around me, the German DAX is kind of lagging here. So,
lagging a lot.
yeah. So I mean, but US. I want to say US exceptionalism. I mean, US companies are still making a shit ton of money. I mean, let's face it. But this is a big week. I mean, we got the Fed this week. Hopefully, we have a government shutdown that it's going to be averted. I mean, we're going to get a shutdown, but then the market's going to rally soon as you know we get funding, which is another thing. So it's just setting up for a brand new high. All I'm saying is, yeah, we
All
could we
right.
could have a government shutdown. on Wednesday, and then in a couple days later, crisis averted, all new all-time highs. Why not?
Okay. Well, I'm going to give you the charts, and for people that didn't do their homework and watch your week ahead video, maybe want to highlight some of your calls for coming into this week.
Yeah, well, that's one of the benefits for watching the week ahead video. So if you guys don't watch that video, I do cover. Not only do I give you like the top three setups, or in this case, this week I actually did four. I also review the
Wow.
ones. Well, I reviewed them from 2 weeks ago because Ryan, filled in a couple of weeks or last week, not this weekend, the previous weekend. So thank you very much, Ryan. And so I covered. I always go back and review what I talked about, and then into the ones that we have for this week. So I don't want to give it all away, but I will, since we already talked about the euro. The 618 retracement right here is the level that I'd be looking for. So Dale, if you're talking about your wave counts really quick, it would look something like be like this. And then this would be your, fifth
Yeah.
wave right here, which would be the 618 retracement, which I think we're gonna see. But as Cayman and Ryan have been talking about, we have these end of month flows, and it looks like what just hit the euro was the hourly, right at the bottom of the hour, the top of the hour rather. We got this rally in the euro back up towards resistance, intraday resistance. So we have to navigate through these end of month flows. Matter of fact, speaking of like end of month, guys, if you didn't hear about it, we have a trader funding program, 50% off. If you've ever wanted to get funded or you've been thinking about getting funded, any one of our instant funding or one-step assessments, less than 25,000. If you've never done it before, you get 50% off. And if you've been in the trader funding program, or you want to do a secondary, account, 30% off any package that we have. And we're one of the only companies that will allow you to get funded up to $1 million worth of a trading account. There are not very many companies that do that. So just so you guys know, I just wanted to make sure I mentioned that really quick. By the way, if you guys also haven't put your name in the hat, we are giving away a trader funding program this month, and we've only got one more day to do it. You have to just go to our website and sign up for our newsletter. So make sure you guys do that when you get a chance. So let's talk about like the end of month flows. Let's talk about the government shutdown really quick. One of the reasons why we might get a government shutdown is because we have a lot of legislators that aren't going to be they're off until the first. So logistically, we might not be able to avert that.
I think they come back today, right?
Yeah, but they're not. I don't know if they're gonna be able to get together and get it all situated to get a vote in time. And that also means that they have to agree on things too. So it does look likely that we're going to get at least a partial shutdown, which then begs the question: are we going to get the jobs report this Friday? And if we don't, that means that the rest of the week is going to be really important, because I believe we'll still get ISM, but also on Wednesday we're going to, between the ADP data, there might be more emphasis on the ADP data, the ISM. We have manufacturing on Wednesday, and then on Friday we'll have ISM services data. So people are going to start really paying attention to some of the other data sets should we get a shutdown. So we just need to keep that in mind. What happened, Brian? What happened with the yen? Were there some hawkish BOJ comments that pushed the yen lower?
Yeah, we had two dissenters at the last Bank of Japan meeting, Tamura and Takata, I think it was. But we've had Noguchi leaning that way now with some comments saying that a hike is, they're getting closer to a hike. So it seems like a few shifting across the line from doves, neutrals to hawks. So that's part of it. Plus, we've also had some polling out of Japan over the leadership. And that's important. That one of the polls was important there because it was from the LDP members who were the ones who were going to effectively vote anyway on this stuff. And they had Takeichi as the leader in that poll from Koizumi and Hayashi.
Got it. Well, so this is one of those things. And K-Man, are you on the in the camp that we should be buying yen here? I mean, especially after, we broke this consolidation, that we've been, kind of forging the last month and a half, 2 months. What do you think?
Buying yen or buying dollar yen?
Buying yen or buying yen based,
No,
just
because
all
I think it's too early. I really think we need to wait for that LDP election. The thing is, though, that Takaichi said something quite interesting, and that is perhaps going a little bit against being short yen, is that if she gets it, she may want to renegotiate the trade deal that they have with the US. She was a bit vague about it, but she was talking about that $500 billion promise, whatever. And that could be interesting. I think there's a lot going on as well now. I mean, the market has been selling yen for quite a while, right? You look at all those yen crosses. Maybe just starting to manage the books a bit going into the weekend because they have their LDP vote on the 4th, and then also the models. And I, for one, don't really understand why it would, looking at the equity markets, but the models are calling for dollar yen selling. So if you see selling of dollar yen into the month end, it's probably just that month or quarter end.
Is it dollar yen or is it dollars just in
Dollar in general.
Yeah,
Dollar.
right.
And I now fully agree. I've been saying it for a while. I mean, this end of month, end of quarter, if I look at the differentials in equity markets for a starter, should be dollar selling, right? And I guess we are already seeing shyly the first legs of it being done. And then tomorrow, of course, the last day of the month.
Right, right. Yeah. I mean, we're definitely seeing some of it. And I wonder if even some of it was done on Friday because we didn't, or on Friday because we didn't get any US dollar buying for
Yeah,
corporate month end.
I was thinking about it because those US corporates, they don't show up every month, but I would have thought that at the end of the quarter, they would have shown up a little bit bigger. But is it not just because of all that uncertainty and trade, etc.? Because we did have last month a sharp drop in imports in the US, and who says less imports means less invoices to pay, right?
Yeah. All right. Well,
You've missed the important factor, Blake. Why euro dollar's up? Because
why is that?
you lot got a chance.
Oh, the Ryder Cup. Blah.
I had to get it in there.
Yeah, you had to. I mean, that was that hey, it was like great. You guys are making your stand. I'm talking to the US on Sunday. Like what happened to you guys like the previous couple of days? It was embarrassing, like, Friday and Saturday. I got so frustrated I actually stopped watching the Ryder Cup on Saturday and I started watching college football. Well, by the way, my son's college where he's at is Ole Miss. That was a great game for. I know some of you that are LSU fans, not so happy. They're ranked number 4 now. Dale,
Yeah,
can you believe that?
yeah, yeah.
Wow,
They
crazy,
played
right?
great. They played great.
Yeah, they did. They did.
Love their quarterback.
And he's the backup.
Yeah, I know.
I
So
know,
yeah,
which is crazy. Yeah, I
yeah.
don't know if he's going to lose his spot. That's for sure. Anyway, going back to markets here. I just want to focus like a little bit on these currencies too. Like we still have like you look at the Aussie, we still have a bear flag pattern. Kiwi still trading heavy. And we have just a crap ton of confluence coming a little bit lower. If we can just make one more stab lower in the Kiwi. which I mean the Kiwi just looks like crap. The dollar CAD actually looks very bullish here. I mean, we have this big inverted head and shoulder pattern. I think it's more of a Canadian story. The Canadian just looks weak as a whole. And then also, you know, I know we talked a little bit about equities, and you guys did talk about gold and silver. I mean, they just look so strong. This is the chart. Just make sure everybody sees this. This is silver on a monthly chart. And you can see what major resistance it is up in the high 40s to 50. This is, you know, 2010, 11. This is, you know, back when Dale was 50 years old, back here in the 80s. Just kidding, Dale. Joking.
All right.
But no, that was the whole Hunt brothers situation that
Yeah.
he was talking about a little bit earlier. And you can see we're heading up there now. And you know, the question is, I know we could have said the same thing back in 2010, like, oh, this is it for silver. Silver is going to double to 100. You know, you can make that argument right now, like the same argument. And by the way, I need to tip my hat to Stelios and Steve, who've been nonstop, literally since I've met them. And you're talking about, you know, the last 10 years, just saying you guys have to own precious metals based on what, you know, the Fed's doing and other central banks are doing, right, Steve? I mean, you guys have been just nonstop precious metal bulls since I've known you guys. I don't know if Steve is here or if his microphone's muted or not. Oh, it is muted. Anyway, there you go. Hey, Steve.
Hey, mate.
Hey, yeah. So you know, I was just saying, you know, kudos to you and Stelios, my, you know, original partners here at Forex Analytix. You guys have been nonstop precious metal bulls. But like I said, we could have made that argument in 2010 or 11, probably, you know, that silver was going to break out. Is this going to be the time that silver and gold can really, really, really break out? Or silver, let's talk.
It is extremely likely. It is
Yeah.
extremely likely. Situation is very mature. It makes sense any way you look at it.
Yeah.
So it is extremely likely, yes.
So the question is going to be, what do we do above 50? And can we hold above 50? Because we're at 40, basically $47 right now. It is obviously very risky to be buying ahead of $50. I'm more curious to see what silver does if we get above 50, if we can hold above 50 for a sustained period of time. That's going to be the story that's told. Hey, I know we got Don Dawson coming up, and so we're going to talk to him in just a bit. I just want to go around really quick and ask Ryan. Ryan, what are you looking at today in particular? What's on your radar today?
I'm keeping an eye on Euro Sterling. We've had some comments out of Rachel Reeves prepping everyone for the upcoming budget. That's hovering around that 87.20 level. Got a little dip to 15.
Very frustrating. I had a bid in up until 3 a.m. this morning, which was just before I got up, to get long Euro Sterling at 15, and we didn't make it to my bid, and then my bids.
Yeah.
It's so frustrating when you miss it by just half a pip.
You might not want it if we go there again, though.
Oh, okay. So what's she commenting on?
Oh, well, I won't go into the boring details. We've been through it in the chat room, but it's a load of old waffle, basically. But she's basically ruled out all the tax hikes that she could do: income tax, national insurance, blah blah blah. So everyone's now wondering what she's going to raise taxes on if she needs to get some money in. Yeah, that's.
So is that going to be sterling positive?
Probably not. But if she's staying to her promises and somehow manages to pull a golden rabbit out the hat in not making the country look fiscally responsible, then yeah, maybe the pound undoes a bit of this negativity that we've seen of late.
Interesting. Okay. All right. Well, we'll keep an eye on that. K-Man, what are you thinking?
Well, as I've said before, I think month end, quarter end, and I'm only going to trade the clock right now. There's nothing new, but yeah, as I also said, geopolitics not improving. Yeah, I mean yeah, bit of air coming out of silver right now, but down to where, we've seen this before, and then it looks like a retracement starting, and then 30-40 cents lower, the bids come back in, and we're trading a fresh high. So not going to stand in front of that, just managing my long gold a bit. That's about it. I think we need to take these 2 days as one. The end of month, end of quarter, because we don't really have a lot. Do we have a lot of data tomorrow?
Tomorrow we
Oh
may
yeah,
have
the
jolts. I have
European.
to look. Yeah, we have jolts tomorrow and
Oh, we have
consumer
Jones
confidence.
tomorrow. Well, yeah, okay. And then the last hour of the fixing, and then a new world can start again, Blake.
All right, very good. Dale, what are you looking at? I know we got you got Dale or you got Mr. Dawson here. But what are you looking at this week for trades?
All right, precious metal top. So I'm scalping the short side, taking partials along the way. And I would be a buyer of the dollar on this break. I think there's more left in the dollar. And if we ever get through that high that we had earlier in the week, I'm still looking for 101.5, 102 Dixie in the coming weeks.
All right, Dale, I'm with you, man. I'm gonna be on the Dale bandwagon
All
as
right.
well.
There's
Yeah,
room for you, man.
I love selling Canadian dollars. So I think, being long dollar CAD is a really good trade.
It's
Or
like shorting Adam Button.
yeah, being short, investing live. Yes,
Yeah,
absolutely.
I
All right, I'm
can't
gonna
get
do that
used to
with
that,
both
man.
hands.
All
All
right.
right, guys. Well, hey, Dale, have a great interview with Mr. Don Dawson. Everybody, remember today and tomorrow, your last 2 days to take advantage of the trader funding program and these prices. So just go to forexanalytix.com right here. Click there to learn more about getting 50% off, especially if you guys are new. Also, right in the very middle here is where you can actually sign up for the newsletter to learn about our trading analytics launch and also enter the sweepstakes that for this month. So make sure you do that. All right, Dale, passing it over to you, sir.
Real nice eclipse on that promo page. I can't believe
Yeah.
Steve let you have that. Steve, how did he get away with having an eclipse on that promo?
Yeah,
Were
Steve.
you
He's not
sleeping?
in control of the design there.
All
So
right. Anyway, okay.
thanks,
Steve
Steve. Thanks,
doesn't.
Ryan. Thanks, Kay.
Steve doesn't. He's not a control guy. Anyway, Don Dawson, my trading warrior brother. How are you, buddy? I have unmuted you, bro. I've asked you to unmute. I don't know.
Now you can hear me. Good morning, sir.
Yeah, got you, buddy. How are you?
Doing good, doing good. You know the old saying, above ground, taking in fluids. It's going to be a good day.
All right, I've heard different extrapolations on that. Just staring down at the grass is a good day. Things like that. So, market wise, I mean, everyone's got precious metal mania going on here.
Uh-huh.
What are you looking for?
You know,
Things like that are a little bit more out of favor than where everyone else is going?
yeah, normally you'll find me in the favor. I'm a trend follower, so I'm sort of in the favor camp. And but I agree
Okay.
on your dollar analysis there. I'm getting bullish on the dollar myself, and I thought that was a good call. I thought today it was interesting watching or listening to some of you guys talk this morning. Your trades are all directional. So if you're wrong on direction, you lose. So I thought
Right.
we would talk about something a little different today, and that is commodity spreads. Now,
Okay.
we can't teach spreads in one 30-minute session here. So, but I
Yeah.
just want to do a little outline of some of the benefits of it and a couple of seasonal spreads. One I just wrote about in the soybean market about how it reduces the risk and how much capital is required to trade them, and to show the significant proof that spreads are more. I don't like that word predictable, but as crazy as directional trading is, they're a little bit more erratic. Where spread trading, we can see statistically actually does have a better trend following. So anyway, I thought we would just kind of touch on that today.
No, I think it's a great topic.
Okay,
I
it's
know people. I knew people. That's all they did. They did
yeah,
bean oil spreads, bean spreads, crack
my-
spreads. Spreading. In
yeah,
fact,
spreading.
one of my best friends in L.A. when I was younger in the business, his license plate said Spreader Steve. That's
There
all he
you
did.
There you go.
So,
Yeah. My very first trade in futures was a spread. I did the old TED spread. I was long T-bills, short euro dollars. And man, I'll never forget my broker going, "You sure you don't want to do a regular spread first or a regular futures trade first?" And I said,
yeah.
"No, I just read this book and it says to buy this spread." Boy, I got riot act read to me for that. Books
And
don't
that
make money.
and that ties in with your seasonal work as well, Don, because a lot of these spreads are seasonal, aren't they?
Very much so. Yeah. I mean, that's sort of been my forte throughout my trading career, and it's been a long one, relatively speaking. And just following the longer term, like seasonal patterns and the spread trading and stuff like that. And the directional trades are okay, but I found my best success comes when the spread trading, long haul. So,
Okay,
but
so let's see
there's
your
some,
screen, bro.
yeah, okay. I'll put that up here. Where are we at here? Dun, dun. Here we go. There you go. Should be able to see it now. Yeah.
Okay, so I hear that a lot of soybean farmers are letting the beans rot in the field. Is that
Yeah,
true?
I'm hearing the same thing. Of course, when there are rumors, stuff like that going around, you really don't know. But a lot of producers will do that kind of thing. The coffee market is notorious for that. Like when prices get down under at $1 a pound, which is their usual production price, the farmers will actually burn the trees, or the producers down there in Florida and Brazil and so on. But they will burn those trees, and it doesn't come back like next year. It takes a couple years for trees to come back. And that, sometimes I look at where prices are right now, and then I can see, pretty high prices in coffee, but I can see us going down here from coffee. I think coffee's done at last, and we're probably going to see somewhere in the low $1.25 again.
Yeah,
Just like,
that whole sector, that ag
yes.
sector, the farmers are under greater stress, I think, than they were in the mid '80s,
Yeah,
when corn was $2 and
exactly.
beans were 8. And it's because of the input costs.
Yeah. Yep.
And I mean, there's stats that 70% of them are going to be bankrupt by the end of the season.
It's going to,
Who grows our food next year?
well, that's just it. Yeah, we're going to be wishing other countries to send us some food, I think.
Yeah.
So,
All
uh,
right. I'm
so
through interrupting. Go
I didn't
ahead,
want to
Don.
interrupt. I could talk about that stuff all day.
All
But
right.
I just opened up. I put it on the MRCI page here
Got
just to
it.
give you an example of a thing here. They put out their October, September trades. But I just want to show you something here. For example, like here's the October trades coming up. And what I want you to just kind of take a look at here is right here. It's called the win percent in this column right in here. And they usually put about 15 trades per month out. And just looking at this, you'll notice we got this one's kind of a freak right here, but down here we got the mini Dow Jones has a 100% track record over the past 15 years of basically going up between October 27th through December the 7th, which is pretty
Wow.
normal for the stock indexes. They're very powerful in the last quarter of the year. So if you
Yeah.
can ride out October and then get a good place to get on board, that's not a bad trade. But that's sort of an anomaly right there of just a 100% or 15. Most of the time you get 87s, 80s, someone like that. Now, when we go back and we take a look at the spreads as opposed to the seasonals, you'll see a lot more like 90s, 100s, another 100, some 93s, 93, 93. What this tells me is these particular spreads over here on the left, some of them are long, like the 5-year, short to 30-year. Then you got intra commodity, which are the ones I really like to trade, and that'd be like August lean hogs. You might buy them, selling the February hogs, right? Here's a British pound and a Japanese yen, and that's got like between October the 7th and November the 11th, the pound basically outperforms the yen. So any of your traders who are trading outrights might be one of those things of queuing between maybe they could trade the British pound, Japanese yen. I'm sure it's a pretty volatile currency to trade, but that seasonal pattern right there just kind of lets you know, even in the spot market, the pound should be stronger than what the yen will be. Anyway,
Okay.
so the point is these spreads just have more consistency in them. And this one's actually pretty low numbers right here for a spread. But this is one of the things that kind of lured me into trading the spreads is because of how much more seasonality is trending. Meaning year after year, they seem to do the same things. So what I'd done is here we go. I'd written this recent article. It was in bar chart, and it was on soybean traders, and it was about a seasonal pattern coming up with a 93% win rate. And when you're looking at this is a monthly chart of the soybean market, and this is the September 25 soybeans. Actually, it's a continuous chart nearby. And so here's where the all-time highs we were up in here. And then down in here, we get these, pretty much I call these production costs. When you get to these monthly charts and you see going back over the last 10 years, and you got multiple lows coming in somewhere in the same area, typically in commodities, that's some kind of a production cost area. And they usually, I call them boom to bust type of cycles. Commodities go to these all-time highs, and then they come back to the production cost. And simply because once they get to all-time highs, everybody and their brother starts producing that commodity. And then it just comes and shakes out all the weak hands, gets back down here to production costs, and makes that next big run up to all-time highs, or it goes higher, whatever. Now you see we've been there and we're on our way back. A lot of our commodities are doing this now. Corn did it. It went to $8, came back down to $3. We're going to see, I think coffee is going to do the same thing here. I wouldn't be surprised if cattle isn't close to doing something like this too. Cattle showing some signs of weakness. I'm not ready to short it yet, but it's looking kind of flaky up here for that uptrend. I mean, they've had quite a run, so I don't think
Huge run.
I
Yeah.
don't think they can
So,
complain about the
so
profits.
maybe if meats are coming off, it is time for the grains.
Yeah, well, true, because feed is one of the feed sources.
Corn's has a nice run off the lows. Do you think the bottom's in?
Yeah, it's that time of the year too, Dale. It's a good point. Seasonally, we do start putting a bottom in here. It might be a little bit early right now because of the excessive amount of corn that we do have. You and I talked about this last year. I'll never forget this one. We talked about it, and you were saying you were bullish on corn already, and I said I'd just like to see it come down one more time here and then go up. Well, it never did come back down, and then your leg kept on going up. So congrats on that trade. But that's what I think we're going to see this year because we have such an oversupply of corn that we've still got time before. Usually, when we got this much corn in the market, it's later towards December we get the seasonal low comes in. So we'll see if that pattern holds for this year or not. Again, the daily trend has turned up for me. I'm just not quite the spreads, if you will, the calendar spreads on corn haven't shown the same bullish pattern that the outright chart's doing. So when they start to
there's
come around a little bit,
backwardation in there yet.
it's a little early for backwardation,
chart.
obviously. Yeah. But when you start seeing just a little bit more where the front month or the near month is just being bought up more than the back month, that's usually a pretty bullish sign for me. So if I see a trend on some of those calendar spreads turning up, that's a pretty good sign that outright's going to be turning up soon as well. So I'm kind of keeping an eye on them for right now. Right now, they're not looking really bullish. So one of the things I just want to watch. So anyway, so the key on this is when we get near market highs, obviously the volatility you can see by these monthly candles really starts to pick up. And when you get in here, like right now, the November soybeans, if you were trading an outright contract, it moves about 15 cents per day and it's $50 a penny. So that's around $750 per day in average volatility. So if you were trading the outrights and you could either be, I want to be long or I want to be short, right? And then you could come down here and you could trade something in options is one way of reducing the risk as well. But we all know if you've traded options, you understand there's a lot of learning called Greeks and everything in the options market. And people make very good money trading the options. That's one of the reasons I went into the spread trading was because it was a lot less complicated than options, in my opinion. It's the same concept pretty much too. Down here, though, if we were trading the calendar spread like the one I want to talk about, the November calendar spread of being the number 2025 November, and then next year's 2026 contract. It's a popular time of the year for the spread.
Okay.
That one moves about 5 cents per day, which is only $250. So you see, we reduced that risk by $500 a day right here.
Right. Yeah.
So
and the upside potential too. You're not going to, well, I don't know. There are some times I've seen times where the spread could move more than the market.
Yeah, you're probably right. Especially if you start getting a lot of limit moves in them, then you get those, I think synthetic positions are put on because the spread continues to trade after the market closes for a while. And so that gives that synthetic spreads to come in. But they do happen, I agree, but they're kind of far and few between, which thank God for that. So
this is a great way to slow the game down for people.
Right, and that was exactly what I was going to bring up right here. This 250 right here, what this also means to a trader, you have a lot more staying power. When you're
Yeah.
trading outrights, you can get so easily wicked out in them by just any little news event that comes along. But because these months of contracts are so closely watched, they're arbitraged by computers, used to be done by hand. Now computers are watching this, and there's a specific reason why each one of these months are priced the way they are. And the spread difference when you subtract the 2 months rarely changes a lot in one day. Even on some of these big WASDE crop report days, they might move 4 ticks, a penny, something like that. It's not that much of a move in these spreads, and it gives you a lot more staying power. So you can get in these for an average of, say, 10 to 20, 30 days type of a hold, as opposed to when you're in an outright, you might be in it anywhere from like 3 to 5 days before you either get wicked out or a target gets hit or a trail stop gets hit just because of volatility. So
Also, the commissions, you're not charged for two separate legs at most brokers. They have a spread commission, right?
right. Basically, you're getting,
Which
well,
is
put it this way,
less
it's
than
not,
two outrights.
you're 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 right on the other side of it, Dale, and that is the margin side. So you're not paying
Oh,
margin for both legs because they have a spread margin, which is reduced considerably. But does margin, or I'm sorry, the commissions, you do have two commissions for each leg or one for each leg because technically
okay.
you're long one and you're going to be short another in a different market, right? So
In
yeah,
the
the
old
broker.
days in futures spreads, they used to have a spread commission.
Oh boy, I wish they'd come back.
Yeah, I mean
But
that.
commissions today are nothing like what we used to pay, right?
Oh no, no.
I
What
remember
are they,
paying
like
40
five
and
bucks?
$50 a leg, right? So
Yeah.
so they're a
Well, that's
lot more.
because you got all that full service with any trade sounded good to your broker.
Oh yeah, they'd call
Ever
you.
seen remember that commercial, the unknown broker? It was a takeoff on the unknown comic
Oh
where the
no,
guy was sitting in front of a bank of phones with a paper bag on his head. That's what the unknown comic did. And the phone would ring, and every time it rang, he would say, "Sounds good, let's do it. Sounds good, let's do it. Sounds good, let's do it." Huh? You don't
I don't
remember that
remember
one?
seeing that. No, that sounds like
Yeah.
a bit of good one
That
though.
was like an Ira Epstein ad or something.
Oh
Anyway,
man, oh
yeah,
Ira
I'm
Epstein.
taking you back on the time machine. Go ahead.
Yeah, I remember him. That's funny.
He's still
Uh,
around. He's out there. He's
yeah,
still doing it.
yeah. I don't know how him and I was trying to think of the other guy that was out there too, but
Larry Williams.
oh yeah,
He's
Larry
pretty
Williams and
old.
Jake Bernstein used to have kind of
Yeah, Jake's
what do you
still
call
out
it,
there.
a road
Jake's still
show.
out there.
Yeah.
Yeah, these are my generation guys.
Oh,
The
yeah.
grandfather, the old
I can
fogey traders.
I can remember him well. Remember, and to see him, you had to go to a hotel, and that's where the seminars were, like a Saturday, Sunday
Oh
seminar,
yeah,
right?
yeah.
So once the circus left, or and the clowns went with it, there was no more getting advice from them.
So you putting on this Novi spread?
I'm sorry for.
Are you putting on this bean spread?
Yeah, this
Looks
one,
like you
and then
can.
also there's another one coming up, but it's going to be the reverse in about 2 weeks, I believe it is. But I'll show you that one really quick here in just a second. But anyway, as a primer of this goes, you're kind of looking at this where you're simultaneously you're buying that November 26 soybean and simultaneously selling November 25 soybeans. And then you're subtracting those two prices. And like currently, I'm just looking at them this morning. It's $10.11 on November 25's price, and then it's $10.61. So when you subtract those two prices, I'll show you a chart here really quick. You're getting around it's a minus 51-ish or something like that. But this spread has actually been moving down and down and down. So when you're buying this type of a spread, you're making money if it's going down because technically
Right.
you're selling the spread because you're buying a further out month. Again, that's getting into the more complicated side of it. But as long as the trend stays down, you're making money on this. But you can see just going back over months, these trends just go down. They get their little corrections. You can sell back in here at higher prices later. They trend so well on these spreads. Now this is a line on close chart, so it doesn't have the high and the low and everything. And
Yeah.
a lot of traders use these. Trend line analysis is a lot easier on this. I still use bar charts on them in the sense of like open, high, low, close for
Okay.
those. And you can get the same kind of results out of them. You can use your own technical analysis, support and resistance, or it could be indicators, whatever your choice is. But the charts look just like a outright chart does, except they trend a little bit better.
Okay.
So when we get back up into where are we at here? Dum, bum, bum. And some of the rationale behind this particular trade is it's called a calendar spread right here. So you're buying the longer term 26, selling the 25, and you're just trading what the spread itself does. So the price of soybeans could go up or down. It really doesn't matter, but it's the relationship between those two contract months is how you're going to make money. And it's
Right.
that relationship between the two contract months that doesn't change drastically. Like the outrights, when they go up, 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 if you're not long, you're losing money, right? But the outrights can go up, and the one that you're short is going to lose money, but the one you're long, you're going to make money on. So it keeps that relationship much more steady. Think of spreading as a hedge. You know what I'm saying? Because you're long and short at the same time, but you're
Yeah.
trying to find the contract month that's going to outperform the other month based on some fundamental reason.
Okay.
And if we want to get
I,
into that, we can see some of those reasons down here in anticipation of supply shortage beyond the near term. So, like the 2025 harvest represented in November contract may appear plentiful, which it did this year, right? And lead to depressed nearby prices. However, a trader could be concerned about a potential supply issue in the 2026 growing season. Factors like weather concerns in major growing areas such as South America could drive up expectations for 2026 contract relative to 2025. So you can see that if there's going to be a supply issue for next year, that's why the 2026 is going to outperform the 2025 of this year, because it's pretty much known the harvest this year is
yeah.
going to have a lot of soybeans in it. So traders now are anticipating what's Brazil's crop or what's the weather going to be for next year, and that's what's impacting this trade right now. And
Right.
strong
The
future.
only thing that would change it would be a China buy in
Yeah, well,
the
China's already buying most of their beans from down there anyway, so
right.
that's
But I mean,
that's
if they came to the U.S. and
right,
bought beans,
exactly. But that would have to
um,
happen over the next until January, February when they really kind of keep an eye on that. But
yeah,
Brazil's going to be taken back over. I don't see that really happening anytime soon.
yeah,
So
they're not coming back.
not anytime soon,
Yeah,
anyway. And then there's always there's a thing called contango, and that's where I think you mentioned that term a little bit earlier. But contango is a normal market, and that is where the nearby month is priced lower than the back months. Like in this
mm,
case, 25 would be lower than the back month, and that allows the commercials to do their function in the market, and that is hedging. And backwardation, as you had mentioned, that's something that an outright trader should be paying attention to as well. That when you see the nearby months priced higher than the distant months, that shows there's not enough supply to meet the demand in that current market. And that's usually an ultimate sign of a bull market coming up. So if you do trade outrights, that's something you might want to put on your checklist of, is the market in contango or is it in backwardation? And if it's in backwardation, that long position's got a lot further to go than what you think it does.
yeah,
Uh, let's
really.
see. So anyway, I know we're getting a little bit on the long wind and we can't teach everything
No,
in
not really.
spreads.
I could use a sports analogy, for how this slows the game down for people.
Hmm.
When a college, say a high school football player goes into play at the college level, at first the game is so fast until they have experience, and then it slows down for them and they start playing better. Same thing when they advance to the NFL. The game's just too fast for them. The quarterbacks that do well, it's almost like even though things are moving at the speed of light, it's slow motion for them because
Hmm.
they know, and that's what spread trading can do because know yourself. Maybe you can't handle major volatilities.
Right.
Where you put a trade on Sunday night, and when you wake up in the morning, you're gone. I
Right.
mean, I've done it.
Oh,
So
we've all,
did it
yeah.
last night. Did it last night. So anyway, I think that people that, especially with limited capital, that would be
Yes.
another reason,
Hmm.
because the margins are lower, the volatility is lower. Just something great to consider. Do you have more articles about this, or how would you suggest people go about learning more on spread trading? Go to more research, or do you have a
Um,
course on it?
you know,
Anything like that?
I think I'm
I
trying to
think
remember.
you should start a course on spread trading.
I tell you, and here's why I haven't done that. And right, remember you're talking about all your friends doing this, but right up here it says this is why floor traders considered spread trading the best kept secret. For
Yeah.
years, I wouldn't even talk about spread trading because I was afraid like the Chicago Mafia was going to come after me or something.
Oh,
So
yeah. Yeah.
they really
Yeah.
did. This was a very big secret to these guys, and when they were trading. And I mean, like for example, how many times do you remember, like in the pits, you remember the steps were set so that each one of the steps was a different month, right? So somebody
Right.
could be trading one month and maybe they're getting a little bit behind in it, so they'll tap the trader in front of them and take the other side of that, like the next contract month out. They'll go bullish on that if they're short on this near month and kind of ride out that extreme volatility. And then when the market starts to go back in their direction, then they'll tap that other trader back and say, I want that pattern or buy that pattern
Yeah.
back, whatever it is. And it basically just hedged their position while they were doing it. So this
Yeah.
going on all the time in trading the market. Now that's a skill because you can still lose some money when you lock those spreads in. But when they knew what they were doing, that's how they saved themselves so many times on longer term trades.
Yeah. Yeah.
So anyway, back down in here. Oh, I was trying to remember. There was a fellow. I think he's down in Texas now. But if you do some Googling up for commodity spread trading, I think you'll find his name will come up. Let me- Just looking here really quick. Give me one second. I'm just going to check a book right here.
Live research.
I got it. Yeah, I'm sorry.
It's all right. It's all
Over
right.
it. Check out it's Joe Ross. You know, I'm not endorsing him by no
Yeah.
means, but he wrote a book on spread trading, and I got to say I've read quite a few books. I've read books on spread trading. I've ordered them in the past, or I thought, hey, this might be a good book. And I literally, by the time I got to the house, I'd already read like the first pages of it, and I went right back to the mailbox and sent it back. But this one by Joe Ross about seasonal spread trading, he does a very good job of breaking down spread trading in the layman's terms. And I think
Okay.
it's a good primer for people who might be interested in spread trading. And you can get it on Amazon. You can buy them used and maybe find them in PDF files out there somewhere too. But that would be a good starting point as a primer book, I believe.
Well, Don, thanks for breaking the ice on spreads.
Yeah, just
We have some other maybe one other guy that talks about them, but not in more like intermarket kind of spreading instead of intra-market spreading.
right. Yeah, with the
You
intra
know,
market, you'll find the volatility is really reduced on those.
yeah,
The one problem
yeah,
with the intermarket spread you have to be careful of is both of those legs can go against you on any given day. Whereas
yeah,
when you're intra-commodity spreading, it's rare, I mean rare, that both of them legs ever go against you. Usually you're always making money on one and losing on the other. And that's the purpose of the intramarket, to get a true hedge. But the intermarket, like you were talking about, even that pound yen spread, what if
yeah.
they
The
both
guppy.
went up that day, I'm sorry, one
Yeah,
went up, one went down. That's not unusual in those kind of currency markets, for example.
yeah.
So I just going to show
Gold
you,
silver ratio,
right.
doesn't predict price.
I just wanted to
Just
show this spread here coming up. There we go. That was, I should put the other date on there and get that for you in a minute. Um, that other spread, soybeans. Here we go. Here's the one that's coming up here. So on October the 10th through October 18th, it's only a 9-day spread. And here's that same spread, but this time you're buying the November 25 and selling the 26. But again, for the past 15 years, it's got a 100% track record, averages about $440 per contract. Now, that doesn't sound like a lot, but when you're only putting up about $600 or $700 in margin for both of those contract legs, it's a pretty good return on your investment in the trade. And this could be, it might just, the trend might, or the move might start on the 8th or 9th. It might even end on the 20th. These are just a seasonal window that gives you a time frame in this area. Their research has found that that's when this trend or the spread typically moves for that time. So it's the same spread, they're just reversing it. So I just find this type of research is pretty important. And let me just pull back up here really quick. The one that we were just talking about on this article here, there we go. This is from September 25th through October the 4th. and it's got a 93% win rate, and the average profit on this one's going to be 738. So see, we're coming up to about time to be getting out of this trade here soon. And so it's been doing very well. I mean, it's been moving down since we got in, and it's just been going down and down. And it's like it's not moving fast. It's not like you got to watch this thing all day. You'd be bored to death if you watched it all day. That's why a lot of traders use that line on close chart, because really all they care about is the day's close. They don't care about the intraday moves because they're so minimal in most cases. So I just thought it'd just be sort of an introduction here. It was one of the first times I've written about spreads on bar chart because I wasn't quite sure how it was going to be received, but it had a pretty good following or feedback from people who are interested in spread trading. So for your listeners might be curious about, hey, it might be another way of learning to trade in the futures markets, especially to reduce some of that risk. And if they're going to be day trading currencies and stuff like that, they can have their money working for them somewhere else in a longer time environment.
Don Dawson spreading his expertise here in F.A.C.E today. So,
All right, I just thought I'd throw you guys a new curveball here.
no, I mean, really, really appreciate the presentation. I think that people should consider that, especially since I think grains are going to be getting more active and they could
Most
be
definitely.
pretty
Yeah,
wild.
it's that time of the year.
Yeah. So, Don, thank you so much for bringing an eye opener to F.A.C.E on a Monday morning.
Well, thank
Really
you for having
appreciate
me.
it.
Thank you
All
for
right.
having me. Enjoy it.
And I would never hedge to have you as a guest. I'm that long when you come in, Don Dawson.
Thank you, sir. I appreciate that.
All right, Don Dawson, everyone. Best place for people to follow you, Don, to go to
That
Barcher.
I
You want to
re-
show
I
it?
got actually I got on Twitter. I've got that at Majestic Futures, and that's
Okay.
where I post all my articles at whenever I come out with those. So that's
Oh, so you're using it more now.
yeah, I use it for I try and stay off of it from the chatting and conflict. It just drives me
Yeah.
crazy. But for posting articles, that's where it's almost like a library of my articles, and they're always posted on there every time I write one.
At Majestic Futures. I remember
Hmm.
the name.
And then
But
there was also
you probably had an IB there or something.
I was actually that was my when I was managing money a little bit. It was my Majestic Futures was my company name, so it just
Okay.
managed. I hung on to it after I got out of it. I still like the name, so.
Yeah. Well, I appreciate you. There's another place to find Don. And Don, I'll get a hold of you either through there or email, and we'll be talking in December to see how some of these spreads played out.
Awesome. I'll be looking forward to it, and I'll talk to you then. Everybody
Oh,
safe, trade safe.
all right. Thank you, Don.
Okay,
So,
bye.
Don Dawson, everybody, Majestic Futures on X at, and you could find him on bar chart every day. And I also see him on LinkedIn. He publishes there too. So you can learn a lot from Don. I do every time he comes here. So remember, everyone, don't just count your pips, count your blessings. You could join the team in 13 minutes on the morning edge. Let's just take a look at what's happening here in the metals before I go away. Okay. So gold's giving some of it up. Silver's 40 cents off the highs. Maybe we're seeing something here. Just look at this 1 hour and new highs in the gold. Here's the 4 hour. Didn't even get there. On the verge of a reversal candle. Probably going to take more. There's nothing on a daily. Silver looks like it could end up being weaker for a while, especially if the gold silver ratio is putting in a reversal today. So everyone have a great day. We'll see you for turnaround Tuesday. Adios. You're very welcome, Golda. See you, Sinatra. See you, Glenn. All right, Marcus. Anyone else want to talk to me? Parth, you're welcome, buddy. Jazir, Simon. All right. We all love you guys.